G'day guys, and welcome to another episode of the Aussie Dividend Machine. In this episode, we'll be doing a stock market analysis and taking a look at the latest news affecting the stock market. On this channel, we're tracking a portfolio, which I've started from scratch to share with you guys. The focus of this portfolio is dividend growth. I'll be selecting strong, high-performance companies which have a steadily increasing dividend payout. In addition to this, we'll be identifying some small, underrated, but companies with some seriously high potential growth. It's well-calculated investments in small companies like these that can help you outperform the market average. Now, a little bit later in the video, I'll reveal one of the stocks I'm looking at the moment that fits that profile to a T. So stay tuned for that, guys. Now don't forget guys, if you enjoy the video, make sure to give it a big thumbs up. And if you're enjoying the content from the channel, be sure to subscribe. And as always, if you've got any questions along the way, make sure to leave them down below in the comments. So without further ado, let's get straight into the portfolio update. Okay guys, so let's jump straight into portfolio update for this week. Here we are on my portfolio homepage on the InvestSmart website. As you can see, my net worth is now just over $10,000. That's recently been increased due to my purchase in Marley Spoon today. Spoken about Marley Spoon in some of my other videos, and I'll get into that in just a second. I'll show you also in this website, which is Self-Wealth. Self-Wealth is my online broker. It's a great broker site, online broker site. Recommend checking them out. You can see here the market is compared against my portfolio. You can see how the market's been going up and down and how your portfolio is tracking against it. So far, my portfolio performance has been fairly flat. The market's had ups and downs across this period. It'll be really exciting to watch how this develops as the months go by. Hopefully, my portfolio either gives me a nice stable growth with the potential of outperforming the market. That's the goal. But I guess with dividend investing making up the majority of my portfolio, you will tend to underperform the market. However, when the market does go down, you'll find that your portfolio will not suffer anywhere near as much. And the dividends coming in help boost that value of your portfolio, provided you keep that money in your investment portfolio. That's why I like dividend investing, because even throughout an economic downturn, dividends from strong companies continue to come in. The opportunity to outperform the market comes from the small portion, or in comparison, small portion of the portfolio that's invested in up-and-coming growth companies. I'll be talking about some of those later in the video, so keep watching. I think picking some understandable growth companies with great potential to increase their revenue tenfold is a great way to access some massive capital growth gains in your portfolio. Now, some of these companies that we highlight and may even purchase perhaps won't do so well. But you only need to pick one or two because their growth can be so astronomical. It can take the value of your portfolio and increase it higher than what you would see from standard market returns. So let's talk about Marley Spoon. Back to my InvestSmart portfolio, you can see that recent purchase I've made. Marley Spoon, I talked about in a previous video. I'll put a link up to that video on screen now. I really like this company's fundamentals. They are a fresh food delivery service, meaning that they deliver the food. It's not cooked. You cook it at home. They give you recipe cards, and they deliver the exact quantities you need to make the meal. Their biggest competitor is HelloFresh, which is a German company which has seen some exponential growth over the last few years. My understanding is that if Marley Spoon can match and compete with HelloFresh, I believe their growth could be on par or even better. I like the fact that they've got two different brands under their umbrella. They've got Marley Spoon and a cheaper brand called Dinnerly. That gives them some price discrimination within the market, meaning that they can appeal to more groups than just serving up one product to the market. I think they've got the fundamentals in place And now I've tried their product. I ordered a box, it's been delivered, I've cooked a meal, and I really enjoyed the experience, and I thought the food was top quality, and I think it is definitely comparable to HelloFresh, if not the same or better. For that reason, I made the purchase today. It's a small stake, but I'll be watching this company closely. And I believe if they continue to perform, and as some of their financials come out later in the year, it's definitely one to watch, and I could be increasing my position in Marley Spoon. On to the next topic. I wanted to talk a little bit about residential property in Australia, and then the property market more in general. So a lot of negative press and negative media about the residential market in Australia at the moment. In this macro business article, which we see many articles that are very similar, it talks about the property market being in deep trouble and potentially suffering some large falls, up to 10 to 15%. This is because mortgage holders at the moment, in general, are under stress due to one, COVID-19, and two, being over leveraged. We've got a really high debt ratio in Australia, and a lot of homeowners, if they lose their consistent income or that's significantly reduced, are really struggling to meet their repayments. That's what these type of articles are focusing in on, and I believe there's definitely merit behind them. However, it doesn't mean that there aren't opportunities in the property sector in Australia. You can see in this next article by the ABC, it looks at Texas tycoons profiting from the Australian property market. Now, how could they be profiting if we've just read an article that talks about 10 to 15% decreases that are expected in the next 6 to 12 months? Well, it's just simply different property types. These tycoons have been purchasing really rich rural properties in rural New South Wales that are primed for agricultural use. They spent over 18 million on property. The real estate agents in the area are absolutely wrapped. And not only that, but the residential prices in this area are booming. This is completely different to the scenario we're seeing in Melbourne and Sydney. And it really shows that with some big business investment, the residential prices can really lift. So, different part of the country, not as widely reported, but there are definitely still gains being had in the property market and even the residential market in the current climate. This holds true for one of the shares in my portfolio as well. Goodman Group, which I purchased a couple of weeks ago, focuses on industrial property, not related to the residential sector of the market, and this company has been performing very well over the past month. You can see on screen now how this growth has just been fantastic. It's gone from $15 all the way up to $18, and that's primarily because of the new partnership they've got with Amazon. I've talked about this in a previous portfolio update. When I purchased this stock, I'll put a link up on the screen to that just now, so you can check that one out. On to the third and final topic I wanted to talk about today, which is a growth opportunity in the market. This Financial Review article looks at the company surfing the e-learning wave. As you may be aware, COVID-19 has severely impacted both tertiary learning and also school learning in Australia. Face-to-face contact has essentially stopped. Face-to-face contact is only happening at university level where there are practical classes such as a chemistry class or a medical class where the students need the face-to-face contact and conducting experiments or doing dissections or whatever it is that makes them a doctor or a chemist. There's no option, there's no way to do this online. However, for the majority of courses at universities and in schools, we're seeing a massive shift to online learning. This shift to online learning obviously presents opportunity for companies that specialize in this area. The Financial Review talks about the COVID-19 outbreak accelerating this trend, and it goes over some sector players, some companies that are doing well or are already invested in this segment and may benefit going forward. Out of these companies, there are a few that I've dealt with in day-to-day life, such as Elmo Learning. They do lecture capture. I've watched lectures online at uni in the past, and Elmo is the service they use to deliver them online. Elmo's doing okay, that's fine, but the opportunity I've picked up on, it was actually mentioned by one of the subscribers in the comments a couple of videos ago, is Open Learning. Open Learning is a software as a service company that provides scalable online learning platforms and learning design services to education providers. Now, the big deal about Open Learning is they've recently signed a deal with Open Universities Australia and Deakin Co. Deakin being one of the major universities in Australia. Why is this big news? Well, Open Universities Australia actually offers online degrees that are credible, and this software is compatible with Open University's curriculum. And this is really important because there are other providers mentioned in this financial review article, such as Kip McGrath, which focuses on tutoring services. You can't get a degree out of the software that they provide and manage. And then others such as 3P Learning specialises in grades kinder to year 12. Whilst important, I think that actually being able to attain a degree online and the value of that is a lot higher than what some of these other companies are offering. So looking a little bit further into Open Learning, we can see an article published, I think back in March, in March 2020. Yahoo Finance is questioning how much cash does Open Learning have left. Open Learning to date has been burning through a lot of money in order to achieve the growth they've seen so far. They're not currently turning a profit. What's changed since then? If we go to this next article, it talks about the agreements that Open Learning has struck with Open Universities Australia and Deakin, and some additional funding that they've been able to secure. And I think that these recent developments for Open Learning are going to be the secret to their success and the secret to them turning a profit. I really believe that this tertiary space is where the money is. People are willing to fork out a lot of money for a university degree, typically more so than for schooling. Not to mention that in Australia, you can defer tertiary payments to a HEX. It's called a HEX scheme, where you don't need to pay it up front. You can pay it off slowly. It comes out of your taxable income and you never really see a bill. It just comes out of your salary, and it allows you to complete degrees without having to fork out any upfront cost. For this reason, people are more willing to spend more on university education. And I think this is the perfect recipe for Open Learning. And I think they've made some great moves in order to essentially break into the marketplace and get involved with these tertiary providers who operate solely online, such as Open Universities Australia. For that reason, I'm going to be watching Open Learning very closely, looking at some of their competitors, and I might do a deep dive into the company in an upcoming video. If you'd like to see that, let me know in the comments below. This is certainly a sector I'm watching closely, and will continue to monitor and investigate further if that's something you guys would like to see. Well guys, thanks for watching that episode and portfolio update. I really enjoyed making this video and I hope you guys learned something. As I mentioned at the start of the video, if you've got any comments, make sure to leave them below, give the video a like and subscribe to the channel if you want to see more great content just like this. Until next time guys, stay safe, take it easy and cheers.